go from here is Keith Fitz-Gerald. He's a principal at Fitz-Gerald Group, joining us from Seattle this morning. Keith, always great to see you. I know you are bullish on this market. Now another day opening higher. What does this mean?
Well, investors, of course, are going to worry about all the things that could go wrong, but as you have correctly pointed out, all the things that are going right are tremendously profitable. So we're very excited by what we see. I think the rally we've seen over the past few days is a cakewalk compared to what potentially is on the table next.
And what would be on the table next? What would take the major indices to new highs?
I think a real deal, as opposed to just a tentative 90-day starter deal with China, for one. I think that many of the other trade deals we're hearing about but haven't yet learned about could do it. I think that we're going to see also return to scale for many of the big digital companies. The deal in Saudi Arabia yesterday, particularly with NVIDIA, is just a precursor to what's to come for the next decade with regard to big data.
Yeah, so I do want to talk about these big technology names, Keith, because we had seen the semiconductors, for instance, pull down almost 40%, in fact, from their recent highs, right? They do have higher betas. You could put NVIDIA in that category. But as we've been moving higher, certainly in the past few days, these technology names really have been leading the charge. Do you think that can be sustained?
There's no question in my mind, because this is picks and shovels time. You know, if you're going to go hunting for all the nice to have stuff, that's wonderful. There's going to be a lot of attractive names to do that, but those are going to be short term. If you want to be a long-term investor, you got to look at the companies that are going to be there. NVIDIA has got, 80+% market share. Several other of the chip makers in that space are pushing hard to catch up. I think that's the place to be.
Yeah, and in terms of what else we can anticipate, I know there are some other names on your radar here beyond the technology name. Are there particular stocks or sectors that you like?
Absolutely. Palantir is a name we've been talking about for a very long time, since the $7, $8 range. It's now cresting new highs. I have rented lips this morning. My goodness, it's early out here on the West Coast. I think that continues to run. My target is actually $200 because the stock is still maturing. The game is still early innings.
Okay, so we did see the president in Riyadh, obviously inking deals with Saudi Arabia, trying to open up that particular relationship. What does that mean for investors?
Well, I think what it says is a huge vote of confidence about the reality of the big data, about the transformative nature of AI, because people look at a deal and they say, well, it's just the deal. No, it's not just the deal. We're talking about 75, 80% of all of humanity on the planet today accessing some form of big data within 18 seconds. That number is going to drop to 10 seconds, and it's going to drop to 5. Deals like that are how you put that stuff together.
In terms of what the Fed does, I think that's a big question for investors, right? A 20% drop is behind us. Trade deals are coming together. The 20% drop really was fueled by concerns about 145% tariffs on Chinese goods, for instance, coming into the U.S. But now it seems like the next hurdle might be the Fed. Do you see that as a potential roadblock down the line, Keith?
I don't see it as a roadblock as much as I see it as a drag. I think that, as you know, I've been harshly critical of the Fed. I think they've been a day late and a dollar short, a few trillion short, actually, on many things. So, the risk here is that the Fed kills the rally because it does or says something silly. And, it's not stupid. It's just that they're playing with outdated models that, in my opinion, don't reflect the world we live in, particularly the digital nature of it.
Yes, so there have been some estimates that inflation could reach mid to high single digits, and that could be in the second half of the year because of some of these tariffs and then the follow-through effect that can take several months to actually show up in the data. We've heard a range, though, of estimates in terms of when the next Fed move is. Some people do anticipate we'll get a cut this summer. I had an economist from Nomura on yesterday saying he thinks a rate cut from the Fed doesn't come until December. Of course, we know that investors and business owners like lower borrowing costs. It allows them to grow at a faster clip. How could that change the game, though, if we see what might be anticipated as a summer rate cut pushed back to the end of the year?
Well, I think, growth is now significant enough that that's almost going to be an afterthought, Kristen, frankly. It used to be all about the Fed. Now it's going to be all about the growth. And that's a good thing because it means the optics have returned to where they should be. Real growth, real results, real profits, as opposed to what's Jay Powell going to do next. That's a different set of calculus. I'd rather be with the businesses and the CEOs any day of the week.
And we do have a bill that's making its way through Congress that would extend those tax cuts, impact spending as well. Do you see that as a potential boon heading into these summer months for the markets?
For the markets, maybe not, because again, I think growth is now the primary focus, and it's very, very clear that that is on the table. I think the tax cuts are going to be more political headline than anything else. I don't do politics, I do money. So what I'm going to look at is, how does that flow into the markets? And we don't know the answer to that yet.
Keith Fitz-Gerald, always good to have you on the show. Thanks again for getting up early on the West Coast, joining us from Seattle today. Keith is a principal at Fitz-Gerald Group.